in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The team currently at the top of the F1 championship standings is winning in more ways than one. McLaren Racing was valued this month at over $4.1 billion in a stake sale, the valuation underscoring the increased investor interest in a growing sport. Joining us now is Zach Brown, McLaren Racing CEO. He's also the author of the upcoming book, 7/10 of a Second, which will hit shelves later this year. Danny is very excited to read this book. I mean, I want to read it too, but she's the bigger F1 fan.
I will be the first buyer.
Well, I hope you enjoy it.
Thank you.
I hope you enjoy it.
Tell us first about the valuations. And did that stake sale go through? Is that
we're all done? We're all done and dusted.
So, man, these valuations continue to just fly. I mean, that's double what it was last time I spoke with you.
The sport is on fire. Yeah. You know, every metric, demand for teams. You know, it wasn't long ago before Liberty acquired the sport and put a cost cap in place, which kind of ensured everyone's financial stability and on track stability and competitiveness. So it's been a wonderful thing. The fans are coming out in the tens and hundreds of millions. Sponsors, partners in the sport, unlike we've ever seen before. So the sport is on fire, and long may it continue.
There's always calls out there when sport valuations pick up that it's a bubble. Red Burns and the Milan owner, for example, has been calling out sports valuations are in a bubble. How do you think about it? Because you are at the top of your game right now. You are in serious race to have both the constructors and championship victory, but also you're going to get regulation changes coming in next year. So have we kind of hit a ceiling in how high valuations can go?
I don't think so. I think if you look at sports in general, and I wouldn't say I'm an expert in all sports by any means, but they've only been going north forever. And, you know, every time there's a kind of record deal in whatever sport it is, everyone goes, oh, that was crazy. And then you look back and in 5 years, they've still gone up. So I think our sport in particular has a lot of room for growth. We have 24 races. We have demand for probably 30 Grand Prix. So the demand is strong. Our car is, has the best brands in the world, the MasterCards, the Googles, et cetera. The competition is amazing. Last year, 4 teams won, 7 different drivers won multiple races. It's the first time I've seen that in my 30 years of following the sport. So the on-track competition is great. The off-track drama, as captured by Netflix, is fantastic. The demand for Grand Prix has never been stronger. So I think the sport, in many ways, is just getting going.
You have also, I think, 53, or last I checked earlier this year, 53 commercial partners, and you've generated the most revenue of any team in F1 history. How do you go about that? Since you're so focused on cars and racing, and you're dealing with Norris and Piastri, and you're focused on aero, like, how do you take off the sports hat and put on the business hat?
Well, fortunately, we're a big organization, and Andrea Stella has done a wonderful job running our racing team. So he focuses on the on-track performance, and I focus on running the business. And of course, we're about 1,400 people inside McLaren, so it's definitely not the two of us. We just have our leadership roles, and we're very focused on our partners. We're very focused on our fans, because you need to have every part of your racing team, not just the technical side, operating as we call world championship material. So whether it's your CFO around your cost cap, or your head of HR around culture, which is what's made our team so strong, our commercial team, everything has to be firing on all cylinders. Sorry to use the pun.
Yeah, I wish there were more cylinders.
Maybe the regulations in 2026 will get there. But Zach, I mean, this is kind of where like the drama bleeds into the sport and the business of the sport, right? Especially with a more diverse viewership coming in. I know you've been very open in saying Christian Horner leaving F1 is good for the sport, or at least it's in a healthier place. There have been rumors that he's going to be able to come back now and maybe will next year. What do you make of that for the sport if he does come back?
I mean, he's had a stellar career in Formula One. His results are lots of driver championships, world championships. So I think when you get into sport, not everyone's best friends. There's different characters. So while we may not have too many cups of tea in England, as we say, you know, you need all different types of characters in the sport. And I think that's what makes the sport very exciting. You know, that's that kind of Netflix effect is what happens off the track. And I think our sport's unique in that not only is the competition on the field of play extremely exciting, there's a lot of competition off the field of play, and it's a small group of, you know, team bosses and drivers. So I think the fans can kind of get to know us all, and yeah. So I've got my friends in pit lane and some that aren't, but I think that's what makes it exciting, and it's authentic and genuine.
It's very fun. I will say that we now have Gunther Steiner in MotoGP. So my family, we watch the motorcycles, and it's awesome to see Gunther come over from Haas.
He's a great personality.
He's definitely a character.
He's so much fun, and that makes it all the more fun to follow. Like, we've been able to get into that because of the Netflix documentary. Do you think, on balance, that's, I mean, is that only good for F1?
It's only good. If we look at what Formula One, where we needed to continue to grow the sport, kind of pre-Netflix, pre-Liberty, it was North America, right? The sport's huge everywhere, but North America, we had one race, and it was kind of a second-tier sport. Now we have 3 races, and it is a major sport in North America. Tick. Youth, because that's all of our future, and we've brought in a lot of youth, and then women in diversity. So the sport over the last 5-6 years under Liberty's ownership has really modernized and become a very inclusive sport versus what was a very exclusive sport. And you saw it took a little bit of change when Netflix came out. 2 teams didn't participate because it wasn't kind of, we're not going to open our doors. And then when we did, and you saw the fandom that came and the exposure it brought for our sponsors, I think they went, uh-oh, I think we need to be in this next time. And so it's been wonderful. And I think the sport now recognizes that without taking care of our fans, we don't have a sport. And I very much believe sport is entertainment. Anytime you're buying a ticket, whether it's for a movie, a sporting event, a rock concert, that's entertainment. So we need to put on a good show for our fans.
But it's beyond athletics, right? I mean, because now Lando and Oscar and you, and you know, you've got to deal with this intrusion into almost into your personal life as well.
Yeah, but you know what? We're in the public spotlight, and that's how our sport works. So if you're not comfortable with that, maybe you should pick a different job. And so I remember my first ever Grand Prix, 1981 Long Beach Grand Prix. I met my first Formula One driver. I saw the cars and the impression it left on me. So at McLaren, you know, there's not a photo or an autograph that we don't stop for, whether it's a driver or myself or Andrea, because you want to leave that lasting impression that I have from 1981 of I remember it like it was yesterday. And we've all met athletes over the years that you were a bit disappointed once you met them. And so therefore,
don't meet your heroes.
It was a St. Louis Cardinal. I'm a Cardinals guy. But, you know, being good 95% of the time isn't enough, because those 5%, you know, it's kind of a heartbreaker. So, you know, you got to be on your A game all the time. And whether it's a restaurant, you can't control when people see you and they want to talk to you. They're excited. They want to learn about the sport. And so I enjoy it.
So you still like going out to restaurants?
100%,
okay.
100%.
Zach, we can't let you go with just asking about the rest of the season, because you've essentially got the Constructors' Championship essentially wrapped up. How much of your attention now is shifting to the drivers, and how much of a threat do you think someone like Verstappen could come up and really threaten, be it Lando or
a disruptor?
Oscars? A disruptor, yes.
I think you got to pay attention to Max. We got to keep doing what we're doing. The Constructors is looking very good. You know, we had a chance to wrap it up in Baku, but let's not talk about Baku. Hopefully we can get the job done in Singapore. And what we want to do is we want our 2 drivers and Max, but we'd like to kind of get him out of there, to fight for the championship and just give them equal opportunity, equal equipment, which is what we're doing, and kind of may the best man win. That's what we want to do. We'd like to not play a role if at all possible, but you get into, you know, Lando had a mechanical and things can happen and safety cars and things of that nature. But I think our goal is to just set Lando and Oscar up to be competing for the championship down to Abu Dhabi, and may the best driver win.
All right, well, that is an excellent way to put it, and great place to end it. Zach, thanks so much for joining us. Zach Brown, they're the CEO of McLaren Racing. Coming up in the next hour, Morgan Stanley's Caterina Simonetti joins us on the FOMO that's emboldened retail traders, and the CEO of Nutrabolt, the company behind C4, plus the Prime Minister of Holland. This is Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A dramatic upgrade on growth. The Commerce Department's revised reading shows the economy expanded at a surprising rate of 3.8% from April through June, Economist Gus Fauché.
So the economy looks even stronger in the, spring, early summer of 2025 than we initially thought. There was an upward revision, particularly to consumer spending. So we continue to see consumers increase their spending, at least through the middle of this year.
Palestinian leader Mahmoud Abbas is addressing the UN General Assembly via video right now. He called on all countries to recognize a Palestinian state and assured through an interpreter,
we are ready to bear full responsibility for governance and security there. Hamas will not have a role to play in governance.
He condemned the October 7th attack against Israel. Sources tell CBS News federal prosecutors will make a decision on whether to comply with an order from President Trump to indict former FBI Director James Comey before the statute of limitations expires next week. Former Justice Department official Tom Dupree.
What is different about this case is that there clearly has been significant presidential pressure brought to bear, and you don't want a universe in which that pressure distorts the prosecutorial judgment.
Trump allies have accused Comey of lying to Congress 5 years ago when he testified about Russian interference in the 2016 election. 2 students at Syracuse University have been charged with a hate crime for disrupting a holiday observance at a Jewish frat.
Witnesses say one suspect entered the Jewish fraternity house and threw an open bag of pork inside during Rosh Hashanah observances for the Jewish New Year. A second suspect is accused of driving a getaway car. Brian Raphael is president of the group End Anti-Semitism Now.
It's really upsetting and very frightening for the whole community that this can happen.
The DA says the religious implications of pork being thrown into a Jewish fraternity house make this a hate crime, not a college prank. The 2 suspects are Syracuse University sophomores. Peter King, CBS News, Canastota, New York.
In Paris,
Je suis donc condamné.
70-year-old former French President Nicolas Sarkozy says he'll sleep in prison with his head held high after he was convicted of receiving millions of euros for an early 2000s political campaign from Muammar Gaddafi's Libyan regime. The BBC's Hugh Schofield was in the courtroom.
Not only was the former president sent to jail, but the particularly harsh terms of the sentence mean he should now be incarcerated even if he lodges an appeal.
And he says he will. Dow down 200. This is CBS News. The number of measles cases is still rising in the Southwest.
A month after health officials declared a major measles outbreak in West Texas over, infections continue to rise in parts of Arizona and Utah. As of this week, 52 cases have been reported in Arizona, mostly in the northern part of the state, and 42 have been confirmed in Utah, mostly in the southwestern portion near the Arizona line. The CDC says the number of known measles cases in the U.S. this year now tops 1,500, the most since 1992, with 3 deaths reported. Steve Kathan, CBS News.
Starbucks is set to make big cuts. CEO Brian Nichols says the coffee chain will lay off more than 900 corporate workers tomorrow and eliminate many open positions. It'll also close about 1% of its locations in North America. He says it's in order to trim costs and plow money into improving cafes. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Scarlett Fu, Paul Sweeney, live here in New York. We're streaming live on YouTube as well. This is the Bloomberg Intelligence program. Lots of economic data. We'll get to that later. But boy, the GDP numbers, Scarlett, were really good.
Which is a surprise. It was a third read of this data point.
And the personal consumption was up. So it looks like the economy's kind of hanging in there.
No need to cut rates, right?
No need to cut rates. That's what I would say, but who knows? All right, we're going to check in with Ed Ludlow. He's our BTech co-anchor. He does all the technology stuff. I want to ask him about this Intel talking to Apple. That would be something.
That's a Bloomberg scoop, by the way.
That is a Bloomberg scoop. That is a green B. That is right on the Bloomberg terminal. And Starbucks, yet again, another restructuring. Scarlett and I were just saying, don't they always kind of restructuring here? But Michael Halen, he's the restaurant analyst of Bloomberg Intelligence. He'll break it down for us. Dana Dioria, co-CIO and group president at InvestNet Solutions, give us her market outlook. It is Environment Week here in New York City. Jessica Roswell, European Commissioner for Environment, Water Resilience, and Competitive Circular Economy. She's going to talk to us in studio on the link between environmental protection and economic growth there. So we'll have a interesting conversation there. So a lot coming up in the next 2 hours. Let's kick it off with John Tucker and a Bloomberg Business Flash.
All right, guys, and this Bloomberg Business Flash being brought to you by IBKR. Will December 2025 CME E-mini S&P Index futures settle above $6,200 on September 30th of 2025? At IBKR Forecast Trader, the yes was recently at 80%. You can start predicting today at ibkr.com/forecast, a last trading day for this contract, September 30th. All right, the major stock averages are lower as rates push higher, and a lot of economic data. One that was just out, it actually came out a little early. It was supposed to come out at the top of the hour. August existing home sales, used home sales I like to call them, falling to a 4 million rate. That's actually better than expectations. Home sales edging down. The high costs seem to be stymieing buyers at this point. The other data we had today, the economy growing in the second quarter at a revised 3.8% annualized pace. The latest revision, fastest in about 2 years. You can credit in large part resilient consumer spending. We also saw evidence of some strength in the job market. Initial applications for unemployment benefits falling to the lowest since mid-July. So as a result of that, rates go up. The 2-year up 4 basis points, 364. 10-year up 3 basis points, 418. Who hates higher rates? That would be tech stocks. So NASDAQ 100 down 190 points, down about 0.8%. Now, meantime, Fed Governor Stephen Miron made his case for more rate cuts earlier today on Bloomberg.
My view is that policy is quite restrictive, and so I'd like to adjust quickly to get back to a more neutral area, right? That just means a series of 50s until you get much closer to zero.
And this breaking news to bring to you: private equity strikes again in the sports world. The Patriots selling an 8% stake. This according to Sportico. So this would value the team at what, $9 billion?
More than $9 billion.
More than $9 billion for the dreaded Patriots.
You made it sound like private equity was the evil empire here. It strikes again.
Did I really?
Well, there's that new rule passed a year or so ago.
There's no commentary on this end.
No.
Well, there's that new rule about a year ago that private equity could buy up to a 10% stake in these franchises. And we've seen 4 or 5 of these deals, I think, so far.
Yeah, Sixth Street is one of the approved firms that can do that.
Yes, that's right. Approved firms. Excellent.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan, streaming live on YouTube as well. As John was just reporting, we got some selling out there in the marketplace. But let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, let's start with Eli Lilly, the drug maker, down about 1%, so modestly underperforming the S&P 500, though not one of the worst performers. This comes after news that the company halted a study of an experimental drug that would be done in combination with one of its weight loss drugs to help prevent obese patients from losing too much muscle. This has been a long debate for these companies. Eli Lilly, Novo Nordisk leading the charge there with patients who are going on Zepbound, Mounjaro, or Ozempic and are actually eating less and consuming less, but therefore losing not only fat, but muscle and other weight. So this coming a bit surprising, according to some analysts, that the company would halt its trial, though a spokesperson pointed to the fact that they reevaluate these drugs trials on a regular basis. So ticker LLY down again about 1% right now in the morning session. Not a sharp move lower, though, really only trading at the lowest level in a few weeks.
I'm also looking at the auto sector doing pretty badly this morning. And of course, if within the S&P 500, you're really talking about Ford, Tesla, and General Motors. But you've got a car or auto adjacent company that's given some disappointing results.
Yeah, worst performer in the S&P 500 this morning by a large margin is CarMax, ticker KMX. Scarlett, this coming after earnings that significantly missed analyst estimates. Truist describing it as, quote, miss across the board with nothing good to see here. Ooh, which is brutal from the sell side. You're supposed to be playing and currying favor to the companies. Unless you're hold rated, though. Scott Ciccarelli maybe reevaluate that price target of $74 because the stock is below 44. Trading, Scarlett and Paul, at the lowest level since the pandemic, March 2020. So CarMax under pressure. We're keeping an eye on AutoNation, Carvana, pretty much anything in the ecosystem again after not only did total used units come in well below estimates, analysts really saying that those weaker trends have continued so far into this current quarter. So it does seem pretty dire out there.
You know, speaking of things being dire, Robert Bosch over in Germany cutting about 13,000 additional jobs at its auto parts business because you've got a sluggish European car market as well. So not good across the world.
But hey, the markets are trading near all-time highs, so it's all totally fine. Just ignore the consumer. And want to wrap up with Jabil, ticker JBL, the second worst performer, only down 7% to CarMax's 24%, though that is the worst drop for that company since the summer. Jabil is a company in the supply chain ecosystem within tech, so some of their big clients are Amazon, Apple, Tesla, you name it. So they reported results that mostly missed analyst expectations. We had Vital Knowledge calling out pressure on margins in their AI segment. So certainly something to keep an eye on. But broadly speaking, when you look at their forecast for first quarter net revenue better than expected, as was core EPS. So this could be just one of those moves for a company that's moved pretty sharp to the upside in the last little bit. Right now, trading around $209 a share. A year ago was closer to $113. So giving back some of those gains, but still pretty ugly performance on a one-day kind of basis for Jabil. Again, ticker JBL.
All right, Bailey, thank you so much. Appreciate that. Bailey Lipschultz, Bloomberg News, covers all the equity markets for us. If you want more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Intel, they're talking to anybody. I mean, talking to everybody.
That is
the
a good
U.S.
point.
government
Yep.
who invested. NVIDIA, they invested. Now there's some reporting that they
SoftBank too. Don't forget SoftBank.
That's right, exactly. Masa-san. Talking to maybe Apple. That would really be interesting. So let's check in with somebody who does this tech stuff full time. Ed Ludlow, Bloomberg Tech co-host. Not sure where he is. Somewhere probably out there in the valley somewhere. Ed, talk to us about Intel and their strategy. And is there a play here for Apple to maybe invest in Intel?
Maybe. I think you summed it up perfectly. I mean, Intel is talking to anyone and everyone that makes sense if they could save them, right, and help them get back on track. That's the way that sources frame it, at least, right? This is Intel approaching Apple and saying, would you like to invest in us? And then after that, we could talk about how we work together. I know that you guys don't necessarily always need the history lesson, but remember, for many, many years, Intel Silicon went inside many Apple products, including phones until 2019. When Apple bought Intel's modem business and started doing that itself in-house. So just like the NVIDIA scenario, they have a mixed history of cooperation, rivalry, tension. But I think that, the market's looking at very much at this like Intel's trying to do something proactive.
Right. And Intel is part of the national fabric no matter what, even though they have given up a ton of market share and have struggled in the last 10 years or so. Lip-Bu Tan is the CEO of Intel, and originally he drew President Trump's ire for not doing enough. And certainly there were questions about perhaps his potential conflict of interest because of his board seats at Chinese companies and all of that. And I might have gotten that detail wrong, but that's something that was pointed out. Yet the president now loves him, and he's kind of returning that by being the ultimate deal maker, or trying to be at least.
Well, you know, on paper, as you say, Intel is what this administration in particular it seeks. American companies that are trying to do more of their operational footprint in country, onshoring, call it what you will. And the meeting that took place between the president and Lip-Bu clearly changed the trajectory of things. But let's be very clear. You know, the reporting about Intel approaching Apple is our reporting citing sources. The deal for NVIDIA to invest $5 billion into Intel and work on products, both of those CEOs, when I spoke to them, were unequivocal. The administration played no part in that. And what I would say is that Lip-Bu Tan is a known entity in Silicon Valley. He has decades of experience and relationships. He's also very close with Jensen Huang anyway. You know, he knows people in Silicon Valley well, and that's something to bear in mind.
Why would Apple make an investment here? Would it be simply being a cynical Wall Street guy that I am, that it's just to ingratiate them with the government?
Why indeed? Yeah, why indeed? You know, people I spoke to overnight are like, doesn't make a ton of sense because of the progress that Apple has made on its in-house silicon, be it the main processor or other components. You know, right now, Apple in lower level handsets has relied on Qualcomm for modem, right? Or for, RF chip. And in other cases, they're using their own. Intel's not really involved in that process. One idea might be like Intel could help them with packaging. So a part of Intel's business is like, yeah, they manufacture semiconductors, but they also just package stuff up, which is like low margin and not as exciting. So one hypothesis is that Apple might want to do some of its own stuff around servers, or like even on the Mac side, and Intel could help them with that kind of more mundane stuff.
Or they're being strategic and, you know, just spreading the word and getting people excited.
Label.
Paul is nodding.
Yeah.
Yep. All right, thanks so much for that. Always appreciate getting your reporting here. Ed Ludlow, Bloomberg Tech co-host out there in Silicon Valley. Again, the news that, you know, Intel may have approached Apple, maybe making an investment in Intel. And that certainly seems to be a good strategy for the company. Stock's up over 50% this year, and that is Intel. Over the last 5 years, it's declined on a per annual basis of like 8-9%. So this has been a real turnaround for Intel, getting some of those AI tailwinds. Well, more coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the latest economic reports, got a few of them this morning. They show resilience in the economy. So that is pushing Treasury yields higher. The 2-year, which is more policy reactive, we'll say, is up close to 5 basis points, 365 in the twos. And the 10-year yield right now is up close to 4 basis points, 418. And that is pushing tech stocks lower. The Bloomberg Magnificent 7 total return index falling right now 0.9%. Intel approaching Apple about securing an investment in the chip maker. You just heard Ed talk about that. A deal would follow the $5 billion investment last week from NVIDIA. And Intel shares in the early going right now, they're up close to 6%. Then you had earnings from CarMax reporting a significant earnings per share and sales shortfall. That's for the second quarter. As a result of that, CarMax, one of the standouts to the downside, right now down over 24%. And then Starbucks, they're going to close stores, eliminate 900 jobs. This is a $1 billion restructuring effort. And just crossing the tape, Health and Human Services Secretary Robert F. Kennedy Jr. opening an investigation into the safety of the abortion pill, mifepristone. I believe that's made by Danco, which is, if I'm not mistaken, a privately held company. So no equity exposure there. We check the market's view. I should say the S&P 500 down 24, the Dow down 42, the NASDAQ 100, 113 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg. Almost forgot the stocks. Scarlet.
Third day of losses. How can you forget about it?
Yeah, well.
It's a sea change here.
Oh my goodness, a sell-off.
Right, for now. Okay, John Tucker, thank you so much. Paul Sweeney and Scarlett Fu here for Bloomberg Intelligence at the Interactive Broker Studio. John mentioned Starbucks, and this is round 2 of layoffs under new CEO Brian Niccol. Although, can we still call him new?
No, I don't know. No, he's
been
in
like
there.
1 year,
He
right?
owns it.
Okay,
Yep.
he owns it. So
Yep.
let's bring in Michael Halen, who owns the restaurant news
Yes.
coverage for us here at Bloomberg Intelligence. He is our senior research and food service analyst. Michael, when you hear the news about Starbucks closing stores, cutting jobs, 900 jobs, $1 billion restructuring effort, it feels like deja vu.
Yeah, but you know what? This was very clearly communicated to the street back in April on their fiscal 2Q call. Management said that, we expect more restructuring charges. We're going to continue to evaluate our store base. Really, management wanted new CFO, Kathy Smith, to be involved in the process. So this was not a surprise. If we hear about some more store closures and restructuring, then maybe you'll see a bigger reaction in the stock.
All right, a shout out to my Starbucks on Route 35 in Wall Township, New Jersey. They do a great job, great folks, very efficient, very good. Mike, what does this company need to do? What do they say is on their to-do list to turn this company around? What are you looking for?
Yeah, it's more operations and marketing, and we're starting to see things kind of inflect here. We think fiscal 26 should be a nice bounce back year. So. First it's with the operations, right? So it's eliminating menu items, increasing labor, which baristas were very happy about, creating a smart queue for mobile orders, right? So the stores aren't as chaotic and baristas aren't serving, mobile orders for somebody 30 miles away before helping someone inside the store. And then service standards, right? They're rolling out these green apron service standards this year. It's a big investment on training and really nailing the consumer experience in the store. And then from there, it's the marketing, and marketing seems to be working. They pulled back on discounts, and what they're doing is more marketing. You'll see some TV ads, right? They're doing more digital marketing. And we think that's a smart move. It seems to be paying early dividends. Starbucks non-rewards member transactions are up. Non-discounted rewards members transactions are up. And we think these are a sign that sales are going to inflect higher in the coming months.
Okay, but this is taking a while. Paul and I were just saying that Brian Niccol owns this now. He's been CEO for a year, and they're still in turnaround mode. They're still in kind of like, let's figure out our path forward. Investors, please be patient. Are investors going to continue to be patient for another 6 months to 1 year?
I don't think they're going to be patient for 6 months to 1 year in terms of the stock price. I think Brian Niccol's job is very much safe. You know, you can't turn around an aircraft carrier on a dime, right? This is a massive organization, 18,000 stores just here in North America, over 40,000 globally. So yes, this is taking longer than a lot anticipated, myself included. Are investors going to be happy if they don't see same-store sales inflect here in the first quarter of fiscal 26? No, they're not going to be happy, and you're going to see it reflected in the share price, right? So, I think they're making the right moves. This has been a longer turnaround than most had expected, but I think Brian Niccol's pressing all the right buttons right now.
Yeah, I just got back from some vacation time in Italy. I don't think I saw too many Starbucks in Italy.
I think they have a Starbucks Reserve somewhere. It looks different than the regular Starbucks store.
All right. So, Mike, I mean, you said they have 40,000 stores on this planet. Is that enough, or are they still going to be putting more out there?
They're still going to be building. I think they need to, they're going to have to nail this U.S. operation and remodel, and they're going to spend a little bit less on building stores in the U.S., a little bit more on renovating them.
Okay.
And then China, they really want to get that market nailed before they accelerate growth. So those are their two main markets for growth. They've been the company's two major markets for growth for a long time. But management's doing the right thing. They pulled back on growth to kind of nail the operations, the marketing. Once they get same-store sales and traffic trending back up strongly again, you'll see them reaccelerate development.
Yeah, but the thing is, it's taking time, and other competitors can kind of step into the void in the meantime, right?
Yep.
All right. Michael Halen, always appreciate your joining us. Michael Halen is our senior research and food service analyst over at Bloomberg Intelligence. Paul and I are looking at the markets here, and it's a third day of losses for equities.
Goodness.
I know. What happened to the bull run? I mean, it's still intact, of course, because we're still near record highs, but we're starting to see some weakness here. So I wonder if this foretells anything more. Let's bring in Dana Dioria right now. She is co-chief investment officer, so co-CIO over at Envestnet. Dana, we got some data this morning that shows the economy is holding up just fine for the second quarter, and I know that is backwards looking. The economy actually grew faster than anticipated, 3.8%, and faster than what was previously reported. Jobless claims also coming in low, which is what you want to see if you're looking for a strong labor market. Do we need to rethink whether the Fed is going to cut rates at the pace that the market expects?
Well, that's probably the question of the day, because certainly we're seeing that the Fed is not necessarily aligned on this, right? And coming off of the FOMC meeting, where it was actually pretty smooth sailing, right? You had one dissenter who wanted to go 50, but other than that, we didn't get this sort of three-way split where, no, 25, 50. It was really pretty aligned around the 25. And now, of course, as Powell said, right, it's inflation and it's employment. And if employment is still looking strong and inflation is looking, kind of bumpy, there is a chance, right, that we get a few less cuts than everybody's anticipating. But there's a lot on the other side of that. I mean, we're sitting right now in a period where markets are, they're losing their footing a little. I don't think it's anything big. I actually think with valuations where they are, you should expect some kind of pullback. But I think there's a lot, to happen before they make the next set of decisions. I still think 2 this year is probably the base case.
Hey, Dana, if in fact the Fed is in a rate cutting mode, is this maybe a time where small and mid cap stocks can actually work?
Yes. I mean, if you're a proponent of diversification into small caps, it's been a long dry run, right? We're finally past the high that we set years ago in the Russell 2000, which is great to see. I do think that is the case. I think, as we know, small caps are much more interest rate sensitive. They're more reliant on capital markets. They do tend to have more floating rate debt. So and whether the rate cuts are a little slimmer than we thought or not, we should be entering a period that's more positive for small caps and just from a fundamentals perspective, easier on them. But, we've had these conversations before. I mean, a lot of the problems with small caps, of course, is, profitability. And there's a lot of empirical research suggesting that, no to low probability small cap stocks are, kind of underperformers on a long-term secular basis. So when you're doing small caps, it does make some sense to have kind of a quality overlay or a small value overlay, pay low for it, basically.
Dana, including today, we've got 4 days until the end of the third quarter. And, typically at the end of the quarter, there's some portfolio rebalancing. It kind of changes things up a little bit. Is that a factor this time around, especially since we've got this possible government shutdown looming?
Yeah, I mean, I don't know how much I think the shutdown, it's a sad, sorry state that we're just kind of used to this. I don't think it moves markets tremendously. I think your point is valid on the rebalancing. And this time of year tends to be a little bit of a speed bump for markets, as we know, September, October timeframe. But at the same time, there's a lot solid. I mean, you started the segment, mentioning it, right? Economic growth is solid. Unemployment still looks pretty good. So I think to the extent you're seeing some rebalancing, there might be some efforts to kind of buy in on, some of the missteps that the market may have. So I don't see it as being anything, kind of fundamental to the market. It's not to say that we don't, have some difficult times to weather at some point coming. But if you're a standard average retail investor, this is probably more of an opportunity to do exactly what you just said. Rebalance, make sure you're at the right risk tolerance. It's not a get out of the market kind of situation.
Dana, what's the conversation you have with your clients about alternative investments, something in hedge funds, private equity, private credit? Those kinds of things?
It has grown dramatically in the last year or so. I would say the last few years, but really this last year, what you're seeing is just kind of a sea change in how the retail investor, and I'll say advisor base, is looking at these. We get questions all the time now around how to use these types of vehicles. And largely it's because these alts managers and traditional managers getting into the alts game are creating, new products, new vehicles that are much more accessible to the standard advisor and investor. So, it used to be obviously ultra high net worth endowments, LPs, private placements, you're locked up, you have committed capital, you have capital calls you have to manage. Now you have interval funds, right? Where they look and smell like a mutual fund. You have to wait for liquidity windows to get out. And then, you also have other fund types like tender offers, right? Private PDCs, private REITs. These are opening up a whole new swath of investors for alternative investing. And it really, it's an educational challenge for our industry, but it's also an opportunity for everyone to kind of get in the game on some of these asset classes that they just couldn't get access to before.
Yeah, it definitely feels like an opportunity because it would feel like every Tom, Dick, and Harry is out there talking about private credit, trying to sell private credit, talking about the democratization of alternative assets. We hear it over and over again. All right, Dana, thank you so much for joining us. Dana Dioria, she is co-CIO of Investnet, joining us from Hartford, Connecticut. John Tucker, we're looking at markets that have pared their losses. Equities still in the red, but not as much as before.
Yeah, it's got a more bullish feel to it, right, at least right now. But they are lower.
Less bearish? More bullish?
But yeah, something like that. With tech on the downside is the latest economic data that is pushing Treasury yields higher at this point. Let's do 8 of the 11 major index groups in the S&P 500 lower right now. Let's do the worst performing stock in the index. That belongs to CarMax, down over 24% after the earnings report. We got that after the close of regular trading yesterday. Best performer, you want to guess? Intel, 6% higher. Scott Kroner, meantime, at Citigroup Global Markets, tells investors, don't worry too much about these lofty valuations.
You don't have to wig out on the valuation. And that's where we kind of go back and forth with, gosh, is the market rich? The market's rich if you don't think the earnings are going to grow. The market's fine if you think you're going to continue to see this earnings tailwind, which I think, increasingly we're very comfortable predicating a view on.
So the S&P 500, 26 points lower, down 0.4%, 6611. The Dow Jones Industrial Average, 36 points lower. That's down less than 0.1%. And the NASDAQ 100 is down 119 points, down just about 0.5%. Two-year yield up 5 basis points. And again, that's weighing on tech. 10-year yield up just about 4 basis points right now. And just to bring you that at the intersection of sports and business, the Patriots set to sell a stake to 6th Street Partners, and the billionaire Dean Metropoulos set a valuation above $9 billion.
Baby.
6th Street's going to buy 3%. Metropoulos will buy 5%. By the way, that Greek billionaire, you know what we know him for?
What?
He was the owner of Pabst Brewing.
Ribbon?
Yeah.
Nice. PBRs.
So the valuation would make the Patriots the second highest valued NFL team, surpassed only by our New York Giants at $10 billion. And if only they could find an offensive line to protect the quarterback, they might be worth more. Anyway, we
Do you
check the
think
market.
PBRs are going to be available then at Patriots games?
Darn right they are.
Yeah.
Well, he used to own.
Okay, he's a seller.
Blue Ribbon.
Ah,
Yeah.
okay.
Anyway,
Big distinction.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. And of course, it is UN General Assembly week here in New York. That means there's a lot of diplomats. There's a lot of government officials from different countries, different regions in town. Traffic is crazy, but it is great if you want to people watch and you want to talk to policymakers. So I'm pleased to say that we have Jessica Roswell here with us. She is the Commissioner for Environment, Water Resilience, and Competitive Circular Economy with the European Commission. Jessica, welcome to Bloomberg.
Thank you very much for having me.
So tell me a little bit first, before we get started on what you're aiming to accomplish here in New York. What is a competitive circular economy?
Well, we have talked about circular economy for a long time. Actually, since the 70s, we have regulation in Europe on circular or waste management and other things. But we have not really gotten circular. So what we have tried now to do is to get it competitive. I think that is the key to actually go circular, because we need to be circular of many, many reasons in Europe and in the world. So that is, I think that the competitive word is important for actually getting it circular.
From your perspective, Jessica, what is the link between the environment, proper care for the environment, and industrial policy? What is kind of the real focus? How should we think about that link?
I would say that green transition that we are in now, that we are doing in Europe and the world, is the growth part. And I've always come back to that green transition and competitiveness is the two sides of the same coin. And investing in green technology and going green and clean, that is the growth strategy for Europe and for the world. And that is what we see that the industries in Europe is investing in. So I would say it's a must, but it's also something that is a possibility and opportunity for our industries.
A lot of people would look at your title, a lot of people here in the U.S., I should say, will look at your title, look at environment, water resilience, competitive circular economy, and think that means a lot of regulation. That means a lot of a slowdown in how things get done, and not necessarily something that creates jobs and creates a competitive environment. Talk a little bit to us about how your portfolio can create jobs while reducing risks at the same time, and therefore be supportive to economic growth.
Yeah, absolutely. I know I have a very long title, but I'm very proud of all the parts of my title, and even I could say I lack some words. But if we go back to circular economy again, I mean, as I said, for us it's really important of many reasons. We are focusing on security in Europe at the moment, and competitiveness. Security of obvious reasons. We have war in our country, in our region, but we also face we know we are dependent on a lot of other regions around the world when going to digitalization, going to green transition, and also investing in security. So we need to be more circular, and that's why I see a competitiveness advantage for our industries to actually gain money for being more circular. So that is what we're trying to do at the moment. But I mean, then I have water. Water is also something that we have taken for granted in Europe and probably in many other places in the world. There's also a competitive link in this. We know that the businesses in Europe are dependent on water. We all are, of course, farming, all you and me also. But also our industries are really dependent on water. That is why we're trying to focus on water. And I would also say that sometimes people say to me that invest in nature is the cost. I would disagree. I would say that investing in nature is it's an investment. And just to have one figure, you talked about a lot of figures before, that the industries in Europe, within the Eurozone, that has corporate loans are at 75% of these companies are dependent on at least one ecosystem. Water is the obvious one, but also others. So I mean, for me, there is this link, and the awareness of investing in nature has become bigger and bigger. But I'm also working on to make that awareness even bigger, because I think this is it's not good to have. It's something that it's a must for our industry to be prosperous.
So what does it mean for your industry, for people who are really trying to link